When you create a brand that has a less than a 3-year payback, the greatest franchisees will follow quickly.
We're taking averages here, but 3 million AUVs, 300K to the bottom line for a typical Dave's is what I've been seeing.
Yeah, I would say more than double that on the margin side.
Kal Gullapalli has 5 Dave's Hot Chicken franchises open and is building another 20. He also is building 30 Popup Bagel franchises, owns 17 Marco's Pizzas, and has 50 European wax centers. He's a big-time multi-unit franchise owner, and in this episode, we go through the full journey.
I started in 2018 with 4 locations, and over a period of time, we grew it to 50 plus.
It's so interesting how they've been able to come into this category that's been there forever and really inject new life into it.
It all comes down to Adam Goldberg. He's the founder.
Yeah.
He had the vision. But when we opened up our first Dave's in Columbia, South Carolina, I had a wedding to go to out of the country, and I was watching religiously on my phone, just looking at stats and because I was really worried. And I told my wife, I said, I gotta go. So I flew back and I didn't leave the kitchen. So frying fries, making plates, frying chicken, whatever it took to stabilize the back, I did. And I'll continue to do that.
Why was Dave's able to go from 0 to $1 billion in 6 years? Let's start with Wall Street. How did you get there from eventually starting or owning your first franchise or small business?
Yeah, so it's a little bit of a long story, but I went to University of Michigan, did an internship at Merrill Lynch in the investment banking unit, received a job offer after my senior year, took it, spent 2 years in investment banking, then about 5 years on the buy side, so worked at Merrill Lynch's internal hedge fund. After Bank of America bought Merrill Lynch, we kind of knew the writing was on the wall. I was able to stay for a couple more years, but at that point I said, you know what, it's time to go down the entrepreneurial journey, which I've always wanted to go on. So started with independent businesses. So I bought 2 butcher shops in Long Island, ran those, had an independent pizzeria in Boston, a burger joint in Boston that we opened up from scratch, our own brand. And then kind of in 2016, my wife and I, we signed to open up 2 Orangetheories, and we opened up our first 2 in 2017.
What was, obviously most of this conversation will be about franchises, but what were your thoughts in retrospect on the butcher business? What are the margins like? How does it all work? Is that a good business to be in?
It was a really good starter business.
Okay.
This is a long-standing butcher shop in Long Island, New York. The first one I bought, and it was there for, I think, since the 50s. Italian themed. The whole community would come there 2 or 3 times a week. But what I quickly realized was butchers were, for lack of a better way to say it, they were kind of a dying breed. So a lot of our team members were 60 plus, and when they wanted to retire, it was really tough to find replacements. So I couldn't figure out a way to scale it. And also meats were coming kind of cut already to the grocery store. So I just didn't see a way for myself at that point early in my career to figure out how do we make this scalable.
Yeah, I've definitely read about these butchers. It's kind of a lost art at this point. Well, Orangetheory, this is like your first great bet that you made, because as far as franchises, you're 4 for 4 or 5 for 5 on just picking great brands. And especially a lot of them you caught earlier. So what was it about Orangetheory specifically versus some other type of franchise concept that caught your eye?
Yeah, a couple things. So I joined as a member first because we were owning those independent restaurants in Boston, and I joined as a member, and I became friendly with the owner there, who was a franchisee and still a very close friend of mine. And as I would go to class, I'd see him in his office, and I'd always sneak in like, hey, Paul, you got a few minutes? And over time, he was very comfortable sharing the P&Ls and whatnot. And so I understood the capability of an Orangetheory. And 2, I really liked the workout and the brand. So we started knocking on doors to try to get a few licenses after I got comfortable with the brand and the P&Ls and what the capability is. So we knocked on doors, and the key things that drew us there was very strong brand. The ramp up to in the initial first year was extraordinarily strong. Like you didn't have this 12 months of pain. And at the end of the day, once you hit kind of end of year 1, 2, and 3, you're generating significant cash. And so the payback of your initial investment was very strong.
Yeah, we had Brett Borak. I don't know if you know him. He was a Ann Arbor franchisee. one of the top 10 studios in the country, and just ridiculous numbers out of the gate in the heyday of Orange Theory. I mean, you're opening on a profitable business on day one. So, well, we're going to talk a lot about Dave's Hot Chicken and Popup Bagels, but there's also Marco's Pizza and European Wax Center, which I believe you exited from. I guess, what came next after Orange Theory? What was the second brand?
Yeah, so we did exit Orange Theory kind of the right time in December of 2019.
Oh, yeah.
Kind of 3 months before COVID. We got a little bit lucky there. Well, it's still a great brand. I actually still go do the workout, but particularly in the Northeast, they just didn't recover as well. Hopefully they do over the coming years. But in 2018, I found an opportunity to buy 4 underperforming European wax centers. This was March of 2018. And again, similar to Orange Theory, where you had this kind of unique 4-wall model, in this case, European Wax Center in the hair removal category, they owned the space. There wasn't even a close competitor. And you saw a model that was the average unit volume, I think at that point was like 950 a million, but the 4-wall economics were 20%. The ramps weren't as strong as Orange Theory, but once you kind of got to that year 3, 4, and 5, and you were generating a significant amount of cash. And what was interesting in our thesis when we jumped into European Wax Center was there's a lot of folks, a lot of franchisees kind of in that year 5 through 10 that were looking to exit. And there weren't so many buyers, so we were buying them at very attractive multiples. And what's interesting is when you buy one of those locations in year 5, the next year, if you just compound your same store sales by just single digits, I mean, you're generating a significant amount of cash and your ROI became very high. And so we just replicated that. I started in 2018 with 4 locations, and over a period of time, we grew it to 50 plus.
Wow. Okay. And as far as your evaluation framework, just for getting into a brand, because you mentioned with Orange Theory, right, there's no 12 months of pain. European Wax, it sounds like, had a good payback period. I mean, yeah, do you have a benchmark for when you need to see that investment to build or buy recouped? And then at that point, like with European Wax, I guess years 3, 4, and 5 is when you're really starting to just, it's all profit at that point.
It kind of changes for me on an acquisition versus new build. So I've evolved over time, but initially we were doing mostly acquisitions. And my thesis was, hey, if I can see a process by which you're buying existing units somewhere sub 5x, and in the early days of European Wax Center, it was between 2 and 3x. And we had this thesis that, hey, if we can build a consortium similar to what happened in Orange Theory, if we can build a consortium that the consortium, the conglomerate, would sell for somewhere 6 to 8x. And that's what actually happened in European Wax Center. And I felt that we saw that happen in Orange Theory because we sold for, I think, 7 and a quarter. So knowing that knowledge and seeing how much interest there was from institutional investors in the franchisee space, we continue to take advantage of that.
I was talking with a Wingstop franchisee the other week, and they were saying, I think they're paying high multiples for acquisitions, but they're at the point where their EBITDA, because they have, I forget how many, but dozens of them. They're 7-figure EBITDA. And they're like, at this point, our multiple is going to be a 5 or 6x. So they're within 1 year of an acquisition, even if it's a 4x multiple they're paying, they're now in the green on that EBITDA multiple, on paper, at least.
Yeah. I mean, once you get into these really good brands, there's an arbitrage where if you're buying onesies, twosies, even, businesses that have kind of sub 10 locations, but you have this big consortium, there's a 2-3 point spread between where you can buy it at and sell it at.
Yeah, and that was just something that was such an unlock for me, because I never really fully appreciated that once you get to a certain scale, the multiple you're going to get because of that just makes acquisitions easier. And it makes sense, right? That's why like the hardest part is getting to that size, and then from there you see these platforms really just grow a lot.
Yeah.
For European Wax specifically, real quick, just you mentioned all you had to do was compound sales by single-digit percentages. I mean, how are you going in there as an operator and even thinking, was there marketing that could be cleaned up to drive more customers, or what are you thinking that gave you the confidence that you could at least do that?
Yeah, it came from the butcher shop days and all those things, but really it was through a methodical process of kind of joining Orange Theory, opening these locations, making mistakes, learning from the mistakes, and just kind of refining leadership. But what I really learned during that first 4-store acquisition in European Wax Center was what not to do. So I bought 4 locations. They were really poorly run. And what we learned was the infrastructure that I purchased, there's really none. So folks didn't have uniforms. There was a manager for 4 locations. They weren't following any of the process, no scripts. So I called the COO at the time, Josh, and I said, hey man, I need some help. And he said, all right, we got you. And he said, let's close all 4 stores, not at the same time, but let's close one at a time. We're going to send a training team. We're going to help you, but just get those managers in place first. And that's what I did. I found 4 managers that could run each location, and we closed each store. And then, I mean, we weren't growing single digits. We were compounding at like mid double digits, like probably 16, 18% 3 months after we opened. And that gave me the confidence, like, hey, if we just follow this playbook in the brand that we were in, the European Wax Center, we could just replicate this. And that's what we did. So the next year we bought 2 more, we opened our 7th, and then we took a private equity investment to really kind of take advantage of acquisitions.
Okay. How many investments did you take to get to 50, or was it just an initial capital raise and then that was all you needed to scale? And was there debt involved also?
Yeah, we had a big capital stack, and I think we raised a total of about 30 million plus to take on the additional 35 locations to get us to that 50. That included new builds and acquisitions, and it was multi-state acquisition plan. So we reached from the Northeast down to Florida and also Illinois. So it was over a period of 4 or 5 years, but we were the first private equity-backed European Wax Center franchisee in the system.
Okay, and what year did you say you exited that as well?
So I still own a piece of it.
Okay.
I haven't fully exited, yeah, but it's a minority stake now. But I left that platform, EWC Growth, back in 2022.
Damn, so that's a quick 2018, 2019 to 50 locations by 2022. How complex is that? I'm sure there's people who will listen to this who they don't have experience on Wall Street. I got to imagine there's some pretty in-depth conversations about the capital structure, what the model looks like, what your equity percentage is going to be, the waterfalls on a liquidity event. What's like the high level framework that maybe someone could take away from this? Or is it you're going to need a financial background to be able to do these private equity backed deals?
There's always an area to play in franchising. Like if you're a small person that doesn't have the capital behind you, I mean, there's SBA routes where you can really add some leverage and take some risk. So you might be playing in the onesie twosie and kind of building a consortium and selling it to the mid-level folks that come in. So when it comes to like the operating agreements that you were alluding to, I learned a lot from mistakes in the past, but also just talking through each of the paragraphs with my lawyer. You ought to have a really good lawyer to make sure that you understand how the waterfall works, how do the equity percentages work, how does preferred return work. And then when you're talking with investors, I think it's a lot about art. It's more art than math, right? You do have to make sure the math works for you because you need to make sure you're incentivized always. But it's also sending out a proposal and seeing if it bites and then kind of playing that negotiation game to see where do you actually fall.
And did the PE firm, did they approach you or did you have a connection of some sorts to it?
They approached me. I wasn't actually looking for capital, but I received an email and a call from an intermediary. And I said, all right, let's go down this route, let's see what we can do. And we kind of talked back and forth for, I think, about 6 months. And 3 days before COVID shut down the Northeast, we took the check.
I mean, I know within the medium term, the business came back, but how scary was that? Was it a month of fear and then you guys realized you're going to be okay? Or how long was it before you realized that things were going to come back to the business?
So COVID in the Northeast really impacted the North. I think it was like March 10th-ish or March 12th, something around there.
The world ended.
Yeah. I mean, it was scary. We didn't know what to do. If you remember those times, I mean, we literally had to close, understand how the virus was spreading and whatnot. And then we were constantly reading the government websites to see how we can reopen, what's the process to reopen. If you remember, like the PPP guidance was changing every 2 minutes. We were the guys, and there was guys a lot smarter than me, but we were first in line for PPP because we needed it. And we got the money. And if you remember, initial guidance on PPP was distribute the money to your team as soon as possible. That's the only way it's going to get forgiven. So we did that. And because we wanted to keep our team as close as possible so that when we reopen, everyone comes back and they're ready to go. Other folks held on to it and didn't distribute it. That was the smart move ultimately, so that they're better capitalized coming out. So what we did is we distributed it because that's what they told us to do. And we obviously was all forgiven.
Yeah.
But when we came out of it, we were undercapitalized, so we had to raise some more capital.
Okay. It was just an absolutely insane time for everyone. When did you not buy, but when did you discover Dave's Hot Chicken?
So kind of going a little bit prior to that, we were in the food space. We made an acquisition in Marco's Pizza, right? And that was in 2021.
Okay.
And so that's important to know because I needed Marco's to get into Dave's. So we jumped in via a 17-store acquisition in Columbia, South Carolina. and we wanted to continue to grow around that portfolio and build a corporate team. So that's when we really got into having an HR team and a finance team so that we can support the growth of Marco's.
Was the thought with Marco's a bit of a reaction to COVID in that, I know pizza did very well through COVID because it was built for delivery already and takeout. So yeah, what was that part of the thesis?
When COVID happened, I mean, I was kind of freaked out. I'm not going to lie. I mean, I was like, we're EBITDA negative next day, and I needed a balance to my portfolio. And that's the reason why we had to find something that was doing extraordinarily well. And delivery and carryout was, right? I remember we were home all the time, so listening to Chipotle conference calls, Domino's conference calls, and they were a huge beneficiary. It was the folks that invested in tech and were ready to be the pioneer in those delivery carryout models now. And so I was looking for a pure play pizza franchise that made a lot of sense. And kind of looking at the top five, Marco's to me made the most sense because a lot of consolidation opportunity. I had a really good acquisition that was meaningful in terms of EBITDA in the Southeast where I wanted to kind of grow our assets. And then the product, in my opinion, Marco's product is the best of the top five.
So I'm in the Northeast, right? I'm in the New York City area, and I don't think I've ever seen a Marco's here. I know they have over 1,000 stores, so I believe it's more regional. But if you're familiar, can you kind of share the Marco origin story if you know it, and why you felt more confident there versus a Pizza Hut or a Papa John's or a Little Caesars?
Yeah, they don't have a huge presence in the Northeast. It's mostly in the Midwest, Southeast, Mid-Atlantic, and Marco's is positioned as that kind of better quality pizza. So when you look at how they index and the consumer sentiment, always they get the credit for the higher quality pizza. So when I look at Marco's versus the competition, and you named four of them, the top four, Domino's doesn't really resonate with someone like me. They want someone in the store all the time, every day. Pizza Hut, I love Pizza Hut, but they continue to decline in same-store sales and store counts, so did not want to go into a brand like that just yet. Papa John's, great product, but I couldn't find that entry point. And Marco's, to me, just seemed like the play because I found a good amount of stores that I could clip at one time, and corporate was extremely supportive on what I wanted to do, which was consolidate, and they were feeding me great acquisitions in the Southeast.
Yeah. So that's really good education, even for me. I didn't fully realize the quality perception of the brand and the product. Was this deal part of the same investor group for the European wax, or was it a separate vehicle completely?
So I have two investors, so that incubated the European Wax Center, like the four store that I told you about, and we got up to seven, and they were bought out by the private equity firm that I partnered with. But then incubating Marco's, I kind of went back to those two guys. And they've been supportive, and even with Dave's, they're involved as well. So we've done well together, and we always kind of incubate that way until there's an exit or a rollover.
Okay. And just given that before Marco's, you had Orangetheory and European Wax as your main or only experiences with franchises at that point, did you have any fears and hesitation about getting into the fast food arena where most people are afraid of the labor turnover and the headaches that causes?
Yeah, I mean, look, there's no doubt that it's hard. There's pros and cons to the different businesses, right? Food is a mainstay, and it's not going anywhere. The service businesses, like you can see in gyms, like you saw with Orangetheory to some extent, there are trends. There are trends, and they do exist. As much as in the heyday we're like, Orangetheory is going to be a great business forever, it didn't, right? Hopefully it comes back, and I'm rooting for them because I like them, but they hit a big sideways to downturn. But food, the right brand, stay steady. But again, they're much harder to run on a day-to-day basis. You're dealing with pennies versus nickels. Now, when you find a unicorn like Dave's, you're dealing with dimes.
Yeah, I want to get to that. Last thing on Marco's, because I believe you still have the portfolio in full, right? It's still the 17 stores?
No, we have 54.
Holy crap. Okay. Given this year has been brutal for restaurants, at least if you're following like the public companies, right? McDonald's, every quarter, it's basically the low-income consumer is disappearing. They've seen it decline by double-digit percentage or high single-digit percentage for 3 or 4 quarters in a row now. What are you seeing from Marco's Pizza? Are you guys somewhat insulated from that, given that maybe it's a higher quality product, maybe it has already commanded a bit of a different customer base?
No, not insulated. We're still in the QSR category, so we are seeing negative same-store sales declines. But if you have a long enough view, like every one of these companies, franchises or independents, are going to see these kind of cyclical declines, and I'm a pure optimist, and so I'm very bullish on 2026.
Okay. All right. So Dave's Hot Chicken, you're building Marco's. You got 17 in one shot, and today you got 54. But in the midst of this, you got into Dave's, which was the best decision you probably ever made. How did you find Dave's Hot Chicken?
So I've always been obsessed with Nashville hot chicken. I went to the Hattie B's of the world and in Tennessee, and at one point we actually had hot chicken on one of our menus for the independent burger concept that we created. So it rooted back to 2016, 2017. So fast forward to Marco's, we had about 45 units, and we were building this really good corporate team. And when you build a corporate team, it's kind of this like seesaw. Like you build a corporate team, but you need more sales, right? And then you get more sales, and you need more corporate team. So we were always looking to bring in multi-brand. That was always a thesis of ours. And as we got into Marco's, our kind of bellwether foundational pizza asset, we wanted to kind of bring a high growth de novo asset. So when we looked at all the opportunities out there, and Dave's kept hitting my radar, and it piqued my interest because of that initial interest in hot chicken and the chicken category, which continues to expand at a great CAGR. We looked into it deeply. I mean, we had a couple validation calls with existing franchisees, and everything pointed to green light. I mean, the way they handle their social, the way their fans they're all like raving fans. And of course, the AUVs speak for themselves. So all that combined, I mean, we knew that we had to get in, and if we could get into the Southeast, awesome. And that's what we did. We bought a territory in South Carolina, North Carolina, a little bit of Georgia.
Okay. Well, how many units was that initial transaction?
The initial one was 10, but we've now upsized, and we're going to be 20, 25 plus.
Okay. Something that's interesting that I've read about Dave's, and I mean, you already mentioned it, the AUVs they speak for themselves. It's funny, they've never shared in the FDD the numbers, which they don't have to, obviously, at this point. I think the country's been sold out for years. But on the investment side, I've seen people say you can get it. There seems to be a scrappy culture within Dave's that started with the founders in their very first location after they expanded from, I think it was a tent in a parking lot, to a first brick and mortar. But yeah, I've read, I think Bill Phelps himself has been quoted in QSR magazine articles where he says the build out for a Dave's Hot Chicken can be 600 to 700K. And these are recent articles. Is that what you've seen? Because in today's day and age of fast food restaurants, that's ridiculously low build out costs.
Yeah. There are times where you can get that on conversions. Obviously, for new builds, that's not doable. But I think what he's referring to is second gen space.
Yes.
We've been close to that number on one of our locations. But, usually it's a little bit north of that for the average location. I think the FDD probably would confer with that.
Okay. And is there almost you guys encouraged to try to find these second gen locations to keep that down? Or how does the site selection and what's the message from the top as far as what you guys should be doing when you're picking these sites?
Yeah, so we work very closely with the real estate team. The real estate team at Dave's is really, really good. I mean, they will tell you no more often than they'll tell you yes, which is very uncommon in franchising, right? And I appreciate that. They want the best locations, and they want the next location to be at higher AUVs than the previous. And you know this, Patrick, like many are just saying, hey, yes, open.
Oh, yeah.
And these guys are very meticulous in how they review real estate. So to answer your question of what we're looking for, I mean, we're looking for the best real estate possible, main and main, and trying to get a market deal there, not pay above market, but something that we can kind of grow into.
Yeah.
And if that is a conversion, that's a conversion. But I'd say our strategy is to find the best real estate. If it's a conversion, great. If it's a freestanding, even better. And I just want to have the best real estate because that's what's going to give us the highest AUVs.
Yeah, I mean, I think it was Ben Little who said this a while ago when he's a 16-unit Zaxby's owner, that if you pay for a bad location, it's going to cost you every single day. So you might save money on the front end, but long term, it's going to hurt you because it really does place a ceiling on what you're capable of. So is there any friction between maybe you saying, I want to get some locations open, like this one would work for me, and then the Dave's team is maybe actually slowing your growth in some sense because they don't want units to open in areas that maybe would lead to what they consider suboptimal performance?
Yeah, I'm sure that happens. I mean, I'll speak specifically to me. Like, I have an urgency of 15 out of 10. And so when I'm talking to the folks at Dave's and they say no, I'm at a point where I've had some stores that haven't worked out, not in the Dave system, but in other systems. And so now I really respect and appreciate having that kind of real estate thought partner who will say no and keep me in check. And even though it feels bad to hear the no. I'm just like, all right, well, they're a lot smarter than me, and specifically in real estate.
Yeah, I mean, the team they built there is phenomenal, from Bill Phelps to the fellow from Blaze Pizza, and then I do see,
Yeah.
yeah. So I mean, that's obviously a huge part in conjunction with all the franchisees. But talk to me about that angle, the franchisee angle, because they've been pretty. I don't want to say like they're not outwardly beating their chests about this, but you can see it on their website. Like the information's out there. They really only partner with existing restaurant franchisees. Why did you find that as an attractive quality for a franchise brand?
Yeah, because it's nice to have a brand that will give you a very large territory to grow into. It's good for the brand. It's also good for the franchisee. It gives the franchisee the ability to grow, right, and build a real company. And then secondly, for the franchisor, I think it just protects the quality of the operations and the entire brand. So it's great for both ways. Now it's harder because a lot of franchisors want to grow as quickly as humanly possible, right, and flip. But if you really want to grow a great business, in which Dave's done it, right? They sold for a very large number just recently. They did it because they picked the right franchisees. They were very methodical. And I'll tell you, the process to get into Dave's was extraordinarily tough. Extraordinarily. I mean, it almost felt like, getting into Goldman Sachs.
Is it like interviews after interviews or financial checks that ran deeper than you thought? But what made it so difficult?
All the above. And also, like you had to provide audits for your existing brands, making sure that you're running a great ship already and you can handle adding a second brand or third brand. In some cases, there's folks in Dave's that have 10 brands, right? So they're looking at existing operations for your other brands and then your financials, who you're bringing on as an operating partner, background checks, I mean, everything, which I appreciate.
Holy crap. Making someone send their financials to their existing brands. That's a real, hey, we're about to size you up here based on what you've been doing for the last few years.
I don't remember if there was the financials, but it was more like store audit reports because Dave's is very particular in making sure that each store, right, runs impeccably well from cleanliness to operations. So it's more on the store audit reports, like making sure that, hey, my Marcos are running well.
I see. So basically making sure that you're in compliance with your existing franchisor. Yeah. Okay. That's a great proxy for, is this person going to be a pain and detrimental to the brand? So that makes a lot of sense. I know the menu's expanded a bit since, but the simplicity of the concept, at least from the menu, it seems like a pretty simple concept. And I know the founders took inspiration from In-N-Out, given that they were in close proximity to where In-N-Out was founded and all that. Did you see that translate to the ops where basically, for the most part, one core product being sold, that made it easier on your staffs and ops?
Yeah, absolutely. I mean, to scale a brand like this with these AUVs, to do these AUVs, you need to have a really good team, even if it's simple. So the fact that it's simple just increases your ability to service the guest as best you can possibly do. And again, even though it's simple, these are not that easy to run. And so they know that. They need to do LTOs, right? You got to continue to stay relevant and make sure that we have great pictures and video for social so that we resonate to our customer, our guest. But they still always ask the question like, hey, is this slowing your ops? Is this going to be hard to execute on so that when you're doing those several $1,000s per hour sales numbers, can you handle it? And are you servicing the guests correctly during those times?
Yeah. I mean, what they've been able to accomplish is just insane. And I know this is like an impossible question, maybe an impossible question to answer, because you could choose the product, the team, the branding and the marketing, all these things that have kind of gone viral for Dave's. But from your vantage point, why was Dave's able to go from 0 to $1 billion in 6 years?
Yeah, I think the product has to be great and there has to be some sort of differentiation because there's so many different chicken products out there. So the thing about the product with Dave's is even though there's so many chicken products out there, the Dave's Hot Chicken product is differentiated enough where people appreciate it. But number two, where Dave's really differentiates is their marketing. Like the social media aspect has really created raving fans.
Yeah.
So I also want to see the ops. Like the ops team at Dave's has really created really good process. The training there is just phenomenal.
Yeah, you've said this a few times. It's simple, but it's not easy. And even on like, if you just look of all the different parts of a franchise, from the team at the franchisor, so real estate ops, which you're mentioning, franchisee selection, I think it's easy to like grasp. Okay, you need someone who's good at ops, but like Dave's got the guy from Blaze Pizza who's phenomenal. Apparently, like Phelps has said he's one of the best ops people in the world. Franchisee
Yeah.
selection, everyone would love to be able to. I think it makes sense. Like only pick existing franchisees who are competent, but doing all these things at the same time, at once, is just so hard. And yeah, it seems like they've just been able to do it year after year now for 6 years.
I'm not saying this is easy, but when you create a brand that has a less than a 3-year payback, the greatest franchisees will follow quickly, right? It's just like, Nvidia stock. Like once you find a great stock, all the hedge funds are going to follow, right? So those 4 founders created a phenomenal business, right? That was very focused on payback.
Yeah, I mean, especially in the food space, I just feel like it's unheard of to have a 3-year payback. What is it? It's like 3 million AUVs and about, taking averages here, but 3 million AUVs, 300K to the bottom line for a typical Dave's is what I've been seeing.
Yeah, I would say more than double that. Not on the AUV side, but yeah, on the margin side. Yeah.
Holy crap. Oh, yeah. Yeah. What am I saying? Well, I guess the build outs, if they're in the 900K range, I would track, but yeah, just phenomenal. And what's your total units owned and open at the moment versus what you're still building out? Because I imagine it's all build outs this entire way so far, right?
Yeah, we haven't done any acquisitions yet. We're open to them, but we haven't done them yet. As of next week, we'll open 5. We should have 7 open by the end of this year of 2025. And we're planning to open 7 in 2026. So our plan is 6 to 7 every 12 months.
Okay. And how do you think about the time horizon on a brand like this where, I mean, because you've seen it, which I totally agree, food's different. Fitness can be very fatty, right? With Orangetheory, and I love Orangetheory too. I think it'll be here for a while. But there's definitely rises and falls, and maybe over the long term, it's still up and to the right for certain brands, but there's definitely better times to exit. So how do you think about the time horizon on a brand like Dave's that has gone through just straight up and to the right for 6 years? Probably now / last year, it's always been an amazing time to sell. Do you have a target date for when you're looking to exit?
Yeah, generally speaking, we're in brands for 4 to 6 years. Sometimes we push it to 7, but that's really because we generally don't take a long-term view on any brand. It's not because we don't like a brand or not. It's just because we want a return to be had to the investors that supported the company. So that's generally our investment horizon. So how long does Dave's last? I hope forever, because it really is something great. But I don't know. Things are cyclical. Things are seasonal too. But it's right now they're off to a great start, and there are some bellwether brands out there that lasted 100 years, right? Can Dave's be one of them? I mean, they're certainly telling us they can, but time will tell.
Yeah. And for this Dave's portfolio, was that those original founders going back to, I think, the Orange Theories who were partially backing that, or is it the private equity firm?
No, this is the European Wax Center folks, and then also Marcos.
Okay. So you really do take a private equity style approach, right? Where you're buying into a brand, building locations, and you're trying to get a return within that 4 to 6 year timeline, which I think is typical for a PE firm.
Yeah. I mean, we're not private equity, but I probably play in the independent sponsor holdco model, where I have this holdco, but we have maybe somewhat different investors in each of the brands that we're in. There's a lot of common denominators there, but somewhat different, and we use this kind of shared office space to kind of support every one of the brands.
Yeah. And for you, like as an entrepreneur, is there a reason this is more interesting to you than say, I don't know, let's just say pick one brand, hold it for 10, 15 years. I feel like most of the franchisees I have on, I mean, they're definitely not, most of them aren't at the scale that you're at, but I've had a 33 unit Little Caesars operator, and right, he's just 33 units in Little Caesars. He's got like one Jersey Mike's and another unit, but for the most part, he's going deep versus wide. And maybe it's different because that's a brand that's already been around for so long, where he's not really worried about it disappearing or going south in a massive way. But yeah, just curious why you're playing this version of the game versus another.
I think generally speaking, it's smarter to go deep into one brand. There's no doubt about it, because you know the business intimately, like you're in it, you're bleeding it, and some of my time can be taken here and there. But when I dealt with what I dealt with at European Wax Center, I just said, you know what, I need to have diversification, and that's more important to me, because you don't know when one of these brands will fail, and so I don't want to deal with that.
Yeah. Well, that totally makes sense given what happened to you guys during COVID. As far as your involvement on day to day, do you have to get, at least in the beginning, whenever you guys buy into a brand, super deep? So, like, if you had to work at a Marco's versus a Dave's versus even in, let's say, European Wax still, are you that intimately familiar with the models, or are you really sitting higher up at this point and you have your corporate teams kind of handling the four wall ops?
Yeah, so my teams do most of the work. There's no doubt about it. But I'm more involved than you think. I'll give you an example. So when we opened up our first Dave's in Columbia, South Carolina, we didn't have the infrastructure at that point, right? And coincidentally, the week after it opened, so it had opened for 9 days, I had a wedding to go to out of the country. And I was watching religiously on my phone, just looking at stats and like, because I was really worried. It's the first days, I wanted to make sure it went really well. And I noticed, like the second day I got to Mexico, that numbers were slipping and they were slipping materially. And I told my wife, I said, I gotta go. I gotta go. And this was literally a year and a half ago, no, 2 years ago, 2 years ago. And she's like, I know you gotta go. So I flew back and I didn't leave the kitchen. So frying fries, making plates, frying chicken, I mean, whatever it took to stabilize the back, I did. And I'll continue to do that, especially during that critical time of opening. It's, now, again, we have a phenomenal team. Like, we only have 4 locations open. I told you we're opening our 5th tomorrow. But we have 4 people above the store just for Dave's, right? So we didn't have the luxury to do that at the first store, but we do now. And now we're really ready to do what I told you, like 6 to 7 a year.
Yeah. What was going on that materially impacted the sales? And I'm asking this because it seems, I don't know, to me, you kind of just think it's like, well, like what, are people just walking into the store and then they're getting bad service, so they're walking out and not buying? Like, is it a marketing problem that you could have fixed remotely? Like, what's going on there?
No, nothing to do with marketing. When you open the doors for a Days, I mean, it gets really busy,
Yeah.
like to the point where lines out the door for a week plus, and it makes adults cry. I wasn't crying, but I was excited about it. But like, you see some great team members, literally, they can't handle it because usually in the restaurant business, right, you have a lull between 2 and 4. But in the first month, and this happens to a lot of great chicken places or great restaurants, the first month is tough, right? It really mentally and physically wears you down. So, and that happened with, all of our Dave's openings, right? And so we got to continue to support our teams. And during that first one, we didn't have a seasoned team, right? Now they've opened 4 or 5 locations, and now that, they're battle tested, ready to go. And again, we have a lot of people above the store who can jump in at any point.
Yeah. I've worked a retail job where you have busy lines, busy customers. Luckily, I wasn't prepping food, but there was other work involved. But yeah, it can be one of the most stressful positions, I think, in a professional environment, especially if you're not ready for it. So I could see how it would wear someone down with a brand like Dave's. How do you think about competition? And the chicken space is maybe a bit of an exception here, but because it just seems the American consumer can't get enough of chicken, especially where you're building. Zaxby's is an underrated, like, dominant regional player. And I say underrated, meaning just within all of QSR, a lot of people don't bring up their name because of how I think over half their locations are in 2 states. But yeah, how do you view that as far as it relates to Dave's, where it's a differentiated product, but you have Raising Cane's, Chick-fil-A, Zaxby's, KFC, Popeyes, Wingstop. I mean, there's so many options for the consumer. And yeah, at what point are you worried about just that category bringing your business down?
So Zaxby's, I've seen the numbers. It's unbelievable what they're able to put up in the Southeast. I just can't even believe it. But I think as long as Dave's continues to stay relevant on social and creates a great product, a consistent product, and the franchisees deliver on the operational execution, I don't see anything stopping in the next 10 years. Because this cohort of people that we've created into raving fans will continue for at least 10 years. And so, if we continue delivering on this product and we don't sacrifice any sort of quality, we'll be in a really good position. And we've opened so many different locations across the nation, right? This started in LA and now it's in the Northeast, Southeast, Midwest, South. I mean, and it continues to resonate with guests all across. So I think we've created our niche, which is kind of a better quality chicken and better quality, if you want, hot chicken. So it's resonating, and I think it continues to resonate while the others continue to thrive as well. So as long as folks in whatever restaurant you're in, as long as you're continuing to provide that great guest experience, you're always going to win.
Yeah. Well, I totally agree. I mean, they're winning on relevance, like across the board. It's just remarkable what they've been able to do on socials, and even the investors, celebrity investors they've gotten on board. It's really, I think, just helped propel them into the spotlight. For you as a franchisee, correct me if I'm wrong, this is the first time a brand you've owned was acquired by a private equity firm while you were owning it,
Um,
or with the Rourke Capital
oh,
acquisition?
European Wax Center was purchased by General Atlantic
Oh,
while we
that's
were,
another big one.
yeah, yeah, yeah.
Has it made a difference to you as far as what you're seeing, what you're doing, either of those, the General Atlantic or the Rourke Capital acquisitions?
So far, I mean, so far, no. You know, you're in the case of European Wax Center, they were a more mature brand than Dave's is now. So I think at that point there was 650 locations when they first bought something along those lines. And the biggest worry at that point was GA would continue to say, "Hey, we're going to triple the store count," right? And franchisees at that point were certainly worried that the US could not handle that, right? And now you look at that thesis and how it's played out. They did grow a lot of locations. And if you look at the stock price, the public market investors have seen a degradation or a cannibalization in the stores, right? This now, if you translate to Dave's, Rourke bought them a couple weeks ago or maybe a month ago, and Dave's has so much runway still that I don't think cannibalization is a big worry. And also, I haven't seen at all any sort of push to infill these locations. We just haven't even grown enough to even talk about that. So for the foreseeable future, I don't worry about it because we're a little bit younger in the life cycle of Dave's. And there's just still a lot of opportunity, especially in my territory. We're going to grow 7 at least a year. If we can do more, we will.
Yeah. It's interesting the dynamics that can come to play between the franchisor and the franchisee side. Well, you've gotten yourself into another hot brand with Popup Bagels. So kind of like we did for Dave's, let's go back to how did you discover Popup Bagels?
Yeah, so I had a friend of mine, Brian. We had never done any business together, but he lives in the New York area, in Connecticut actually. And he called me and he said, "Kal, you got to look at Popup." I go, "I have no idea what that is, Brian." And he said, "Well, you got to look at it." And so he found out that the CEO of Popup was going to RFDC. I'm like, "Hey, Brian, I'm going to be there." So we coordinated to go a day earlier to meet up with Tori, who's the now CEO of Popup. And we learned more about the brand. And Brian kept saying, "Kal, you got to try the product. It's unbelievable." And then we met Tori and we learned more about what they're doing with franchising. And then I tried the product. I went to New York and met with corporate, had dinner with them, and I went to their Thompson Street location. And I'm like, oh my goodness. Raving fans, phenomenal social, and a great brand. And I'm like, eerily similar to Dave's. Completely different categories, but in food. And just kind of thinking about how the economics can play out. It wasn't that much of a diligence period. It was like, we got to run with this.
And when did you, or I guess what was the initial entrance to that brand? How many territories did you purchase?
We initially asked for Florida. And
The whole state?
Yeah, the whole state.
No small boy investments for you.
Yeah, yeah. And they corporate wanted to do South Florida, so like the Miami, Fort Lauderdale region, and so we understood that. So we said we'll take everything else. They said, "Well, hold on. Like we think you should do Tampa." And then over time, they started to get to know us, and they started to get confidence in us, and they said, "You know what? Let's do it." And so the partnership's been great. The conversations have been great. We've been working with them weekly and to build the pipeline of stores that we're about to build. And our first location opens up just after Labor Day. The first location in Tampa, and then we have like 7 leases behind that. So we have a really robust pipeline that we're about to fill.
Holy crap, man. So how many locations total is that territory development?
Oh, yeah. So we committed to 30.
30. Holy crap, man.
So, but if you think about it, we have Tampa, Orlando, Jacksonville, kind of Naples, Sarasota, and then all these kind of infill markets in between them.
Yeah. And is this a model where you're thinking it can work in the small town? It obviously, I mean, I'm right here in New York City. Lines at the door. I've heard the numbers out of the store are just absurd. You're thinking, though, it can also work as that small town bagel shop?
We don't know yet.
Yeah.
I think so. We don't know yet, but we're not even focused there. Like, for example, our first location's in a really awesome area in Tampa called the West Shore District. And then we're going to Winter Park, Orlando, Then we're going to the St. John's Town Center in Jacksonville, and then we're doing some infill areas. But even the infill areas right now, because we're so new, they're like high traffic infills. So once we get to kind of like the 25, like I'd say 20, location 2021, maybe we'll start looking at the more regional player locations. But we'll start looking for smaller locations so we can still keep it efficient and profitable.
Yeah. I just think it's so interesting how they've been able to come into this category that's been there forever and really inject new life into it. You're a former Wall Street guy. You own businesses on Long Island, so you know bagels. Like, I know that.
Yeah, yeah.
Why do you think there hasn't been yet? I know Einstein Bros has 700 or so locations, and I'm not trying to throw shade, but I don't think anyone's really raving about that product. And certainly people in this Northeast area are not. I would get made fun of if I went to an Einstein Bros bagel.
I mean, it all comes down to Adam Goldberg. He's the founder.
Yeah.
He had the vision. Again, it's similar to like the Days folks. You have these entrepreneur folks who are like, probably a lot of people telling them they can't do it, and they like, no, I'm going to do it. And they figure out how to make a great bagel, what the right recipe is, what's a scalable recipe. And then, like, if you see Adam Goldberg work a room, he's a magician. So if he goes into any room, it could be like 100 celebrities. He'll go up to every single one of them and create a relationship. And so he used these relationships to continue to build a brand, create the social Instagram influence on Instagram, TikTok. I mean, he's brilliant.
And do you think, though, I mean, has it really just been like other bagel franchises haven't been able to have the right mix of product and marketing? Because you look at all these other categories, man, chicken, burgers, coffee. I mean, there's nationally known brands in all these categories. And to me, growing up in New Jersey, I mean, bagels feel a bit like a regional food, but America loves carbs, man. And that's what a bagel is. And a good bagel, it's like the best form of carbs you can get. So I'm talking high level theories here.
I think what happens is when you have like the Einsteins of the world, like maybe when I grew up, Einsteins was a little bit more popular,
Okay.
right? But then as we age, right, Einsteins is not relevant to the 20-year-olds,
Not at all.
right? So that's why like I think these new brands emerge, right? And they do so well because Adam figured out, okay, hey, I want to hit that 20-year-old demographic. And that's what happened, right? They're on Instagram all the time and TikTok, and he knew that very similar to the burger category, it needed to be reinvented via Shake Shack and Five Guys, right? And that's what happened, call it 15 years ago. The burger category was ripe for innovation, and he came in at the right time and understood who his customer was and tripled down on it.
Yeah. And between Dave's and Popup, I would throw Crumble into the mix as a similar playbook where viral marketing captured the younger generation. Do you think that's almost like this formula where if there is a category that's become stale in food, and maybe even other industries, but we can stick to food, the categories become stale, that is actually opportunity for a new brand to come in, assuming they have the right team, the right product, and all the other things that you really need to be successful?
Yeah, I mean, they showed us like how great marketing can be. I mean, I think I forget his name, but the founder did a post a day, right? And unboxing of cookies,
Yeah.
and their customers loved that, right? It really resonated and built that audience. And so when they opened every single Crumble across the United States, I mean, same thing, lines out the door. So, there's a playbook to this, but at the end of the day, I think the ones that win have a great product behind it.
Yeah. For Pop-Up, you're definitely earlier stage than when you found Dave's. I want to comment on how, I mean, you mentioned like the way the product came about and the marketing is similar to Dave's, but even the strategy where I know Adam sold a decent chunk or actually a large chunk of equity to investors, and more importantly, like they raised money to hire a proper CEO. Not to say Adam couldn't have been, but I just think, there's a lot of brands who the founders maybe hold on for a lot longer than they should. If you have something that can go national, become a billion-dollar company, I mean, running a very emerging franchise is so different than that. So having someone who's done it before can really just be a benefit. But yeah, is there any, for you, given your experience, I don't know what the other pop-up bagel franchisees, what their backgrounds are, if it's similar to Dave's where it's a lot of food franchisees, but have you almost been working tight with them, just given your experience in these other big franchises, and maybe it could be helpful for them to lean on as they build their systems at the franchisor level?
Yeah, I mean, the first comment you made about Adam, I mean, yeah, I think Adam having the knowledge that, hey, he's not a franchisor or he hasn't done it before, he had the wherewithal to kind of see that, which is pretty smart. And he brought in Tori's a seasoned franchise professional, and we're excited to work with him because he's going to take this to 1,000 units the next how many years. But in terms of the franchisees at Popup, yeah, very strong. I mean, you have a lot of multi-brand, multi-unit franchisees. We're all getting to know each other. I know a handful because I think a couple of them from Dave's and other brands that I've been close to, but the folks that are coming in are strong. And so I know the guys in North Carolina, the first franchise that opened up in Boston, they're off to a really good start. So yeah, we're growing a tight relationship. You know, the first conference is already set, so we'll forge even deeper relationships as we kind of go down this path together.
Yeah. And I meant to ask this earlier as far as the ops of a pop-up, right? Am I right in thinking that you have to order a certain quantity, size? It's 3, 6, or a dozen plus bagels. You can't just order one. And the whole purpose is, right, they're almost trying to not force you, but the thought is that you're going to buy multiple bagels, you're going to eat it with other people, and it's always about tearing them apart and dipping them because they have a rotating menu of schmears, right?
Yeah. Yeah, it's grip, rip, and dip. You're right. You know, there's a minimum level of bagels, but really, it's an ingenious idea. I mean, that's how you make the economic model work. But more importantly, that's how you keep fresh bagels in the customer's hands, right? You're always making hot bagels, and it really goes back to the old school bagel shop where you're going in there and you know it's going to be a hot bagel. So it's genius. It really is genius.
Yeah, I read something about Raising Cane's recently. I'm going to mess this up. I forget which one it was, but it's every 3 minutes, I think they're throwing out their French fries. Every 6 minutes, they're throwing out their chicken fingers because they want the customer having fresh food only. Is there anything like that with a bagel concept where the cost of goods are relatively cheap, so might as well?
Yeah, we're doing that at both concepts too. So, you know, we have timers for everything. We make sure that, again, customers are leaving with the best product possible, so that's a consistent, great experience.
Yeah, incredible. Well, as we're wrapping up this conversation here, is Pop-Up the same as the other concepts where you have that 4 to 6 year time horizon to get a return for investors?
It's always tough to say, but likely. Yeah. But we're so excited. I haven't even thought about it. We're so excited to open our first store and build, again, like 7 a year. But of course, I mean, our investment team will always review, like, do we want to be in it for another 1, 2, 3, 4, 5 years? And there's so many considerations behind that. But we'll always review it on a quarterly and a yearly basis.
Yeah.
But right now, we're not even thinking about when it's done because we like the brand so much that, you know, there could be additional states that we take.
For sure. No, you want to enjoy the ride. Can you just give me what is a day in the life of Kal? Because I mean, you're building Dave's, you're building pop-ups, you've got your Marcos, you're still a minority stakeholder in European Wax. I mean, I don't know what the total units is, but you have a lot. You're doing a lot of big things. I mean, do you sleep?
Yeah, I sleep a lot, but I have a really good team. I mean, they're always working tirelessly, and I appreciate them every single day. But yeah, it's busy. It's really busy. It's nonstop. A lot of texting. I mean, as we're on this podcast, I think I got like 40 texts.
Oh my God.
That I got to get to.
Yeah.
But, you know, it's making sure that I'm always on top of my inbox and calling people back. And when I have 15 minutes, calling a manager and just saying, hey, I saw what you did last week, and I appreciate you. But I love this. I mean, it's not really work to me. This is like my dream. Ever since I was a little kid, I worked at Little Caesars. That was my first job. And I was like, why can't I own 100 of these? And so I'm living my dream right now.
That's awesome, man. Well, I know you got text to go to. So last question would just be, you're living your dream. So are you just looking to rinse and repeat with new brands for the next 10 or so years? Do you ever want to be a franchisor? Do you have some like long-standing North Star goal that you're trying to work your way towards?
You know, I spent like the last 9 years really learning the franchise industry and how to navigate it. That I'm 43, so I want to spend the next 7 years, you know, just rinse and repeating everything I've learned in my 30s, because I think that's where I can provide a lot of value to and development for my folks. I'm never going to retire, but I don't know what the evolution of me will be. But right now, I'm having too much fun to even think about it.
Okay, cool. All right, man. Well, you're like 4 for 4 on the brands or 5 for 5 on the brands you pick. So, yeah, next one we're gonna have to get you on when you're day one, signed an agreement, so we can hear what the thesis is, and hopefully the audience can benefit from it too. Where can people follow you to follow your journey with all your brands? And even, I know you have a holding company that, you know, is building an audience on LinkedIn. Where can people follow along and maybe get involved?
Yeah, I think 2 ways. Just LinkedIn is probably the most active I'm on is Kal Gullapalli, and then also MPZ Holdings is where we post a lot of our activity and kind of what we're doing. So Mary Peter Zebra Holdings.
Cool. We'll link those in the show notes, folks, so you can get involved and follow Kal. He's doing a lot of awesome things, as you can probably tell. Yeah, thanks, man. Next franchise you buy into, we'll have to hear about it early on so other people can get in on the alpha, because it seems like the brand you buy becomes the next big thing. So, yeah, man, we appreciate you coming on.
Thanks, Patrick. I appreciate you having me
All
on.
right, thanks, man.